Assalamualaikum. Good morning, class. Today we are going to discuss exercise in the study guide for chapter 3, redemption of preference shares, share buyback and redemption of debenture. So please take a look at question Menora Berhad. So we are going to answer this question together. Okay, given below is the extract of statement of financial position as at 31st December 2000 year 5. So this is the end of the accounting period. Okay, you have the balance for equity, which consists of issued and paid up capital, 200 million ordinary shares at 300 million ringgit. And then you have reserve retained profits account at 190 million ringgit, followed by the liabilities, that is non-current liabilities, which consists of 50 million units, 10% redeemable preference shares at 100 million ringgit, and 10% debentures at 16,500,000 ringgit. Followed down here are the assets. You have the long-term asset or non-current asset investments by 120 million and bank account at 180 million. So down here, you are given the additional information which refer to the transactions that took place during the year ended 31st December 2000 year 6. So you are going to make some adjustment accordingly. Okay, we have 5 additional information down here. So let us read one by one of the transactions occurred during this year. Okay, the first one, the BOD agreed to redeem all of the 10% redeemable preference shares at the carrying value, partly by fresh issue of shares and partly by out of profit. So, additional information number 1, is tested us on the transaction on the redemption of preference shares. Okay, remember in chapter 3 we have 3 different activities. Redemption of preference shares, share buyback, and also the redemption of debenture. So in this part, let me write here. Okay, hold on. My pen is not really functioning. Okay. So the first transaction is tested on what class? Redemption on what? Can anyone guess? Redemption on redeemable preference share. So how much do you want to redeem, class? How much do you want to redeem? You will redeem all of the RPSC. So here we have a balance of 50 million units of RPSC and we are going to redeem all. At how much? At the carrying value. So we are going to redeem at this value, class, 100 million. And what is the method to be used? We are going to use a combination of method 1 and method 2. Meaning, we are going to use partly by issuing shares and partly by out of profit. So this is the methods to be used. Okay, number 2. Since we are going to issue the shares, we need the information of how much of shares to be issued, what types of shares to be issued. Okay, continue to number 2. For the purpose of redemption, 30 million units of ordinary shares at 3 ringgit per share were issued and all the shares were fully subscribed and paid for. So you are given the information on the issuance of shares where you are going to issue these shares at this price. Okay, and then what you need to know is that, if the amount is not sufficient, then the balance will be taken out of profit. So this is the method for issuance of shares, while the profits will be taken, based on the remaining balance. So you have to find out how much shares that you have issued to cover for the redemption. So additional information number 1 and number 2 is tested on the redemption of redeemable preference shares. Okay, let us look at additional information number 3. Okay, for number 3, it says that 50 million of the ordinary shares were repurchased. Okay, the word here, repurchase, at RM1.70 each in the open market for immediate cancellation. Okay, see, we have ordinary shares up here. Okay, and this time the company wants to do the share buyback or purchase open share. So how many shares? Is it all, class? No, the company wants to purchase 50 million only. They want to purchase 50 million only. At how much? RM1.70 each. And what method to be used? Share cancellation method. Meaning that these ordinary shares, partly will be reduced, due to the cancellation. So additional information number 3 tested on what, class? Share buy.
Buyback.
Very good. Share buyback using what method?
Cancellation method.
Very good. Share cancellation method. Don't forget, remember, I've taught you previously, when company cancel the shares, according to section, according to Companies Act 2016, the company must maintain back the shares repurchase. So by taking the cost of shares repurchase from where, class? From which account? Remember? From which account?
Retain profit.
Very good. From the retained profit account. Don't forget to maintain back the shares that has been reduced due to cancellation method. Okay, number 4. Number 4 tested on what, class? Can anyone guess? Very clear. The company wants to what? To redeem?
Debentures.
Very good. This is tested on redemption of debenture. So how much do you want to redeem? All. You want to redeem all at its carrying value, meaning that later on this debenture account will have zero balance because you will redeem all. Similar to the redeemable preference shares, later on this account will have zero balance because the company wants to redeem all. Okay, last but not least, the BOD has also agreed to issue 1 million units of bonus issue to the existing shareholders using retained profits at RM2.50. So recall back what you have learned in chapter what? Chapter 2, class, issuance of shares and issuance of debentures. Okay, one of the way the company can issue share is by offering bonus share. So company will use its reserve, to issue the bonus share, since the bonus share is free of charge to the shareholders. So how many units? Okay, the number of units already given, at a price of RM2.50. Therefore, class, overall, we will have 1, 2, 3, 4 transactions to be recorded. We have redemption of redeemable preference shares, followed by share buyback cancellation method, redemption of debenture, and number 4, transaction on bonus issue. So you are required to prepare the relevant journal entries for the above transaction without narration. So very simple. Let us prepare the journal entries together. So this is how you prepare for the answer. Since we have 4 different transactions, so we have to separate the transaction accordingly. Okay, number 1 is to record for the redemption of redeemable preference shares. So um, how to calculate for the amount? In this case, you are very lucky because the redemption is to be for this remaining value because the company wants to redeem all of the redeemable preference shares. So you are going to record the first step, that is to redeem for the shares debit RPSC. Remember, I told you to write in full, Okay, RPSC. RPSC stands for what? Redeemable Preference Share Capital. At how much? You want to redeem all, 100 million, And then you credit to a temporary account called Redemption of Preference Share. This is a temporary account for you, for the company to make the payment in the next step. So the next step is to make the payment for the redemption. So you debit the redemption of preference shares and credit the bank account. Why you credit bank? Because you make the payment. So at this stage, you can see that this account, that is redemption of preference shares, will be immediately closed once the payment is made. So far, class, can you follow me?
Okay, madam.
Okay.
Yes, madam.
I need response from others too, yeah? Please, be alert. Okay, the next step, we are going to replace. Remember the requirement by Companies Act 2016 where the company needs to maintain back the shares redeemed. So how much is the shares redeemed, class? How much is the RPSC redeemed? How much we are going to replace? How much, class?
100 million.
Sorry? Is it 100 million? Are you agree with me?
Yes.
So how to replace these shares redeemed? The company is going to use method 1 and method 2. What is method 1? Issuance of shares. And method 2 is to be taken out of profit. So we start with by issuing shares first. According to the question, okay, the company will issue 30 million ordinary shares at 3 ringgit each, and the shares were fully subscribed and paid for. So first step is to record the amount that you receive from the issuance of share. How much? 90 million ringgit. 30 million units times with 3 ringgit. Credit to ordinary share application with the same amount and close the application account. So in this case, class, okay, I think there's an error here, class. It should be, this one is not ordinary share capital. It should be what, class?
Preference share.
No. Oh yes, betul. Sorry. Sorry, I thought nak ganti tadi, sorry betul. Sorry for that. It is fully subscribed. The shares are fully subscribed. Is it? Yes, the shares are fully subscribed. I thought ada oversubscribed. The shares are fully subscribed. Meaning tak perlu, reject and refund the application. So, you close the application account and transfer to where, class? Where do you need to transfer? Ordinary share capital. So you will close the ordinary share application and transfer to the ordinary share capital. Therefore, class, this account, ordinary share application, will be closed immediately once the shares has been transferred to the capital account. Okay, last but not least, you will check again. Okay, you have redeemed 100 million, but you have replace for 90 million only. Is it sufficient?
No, madam.
Okay, how much? The balance, class.
10 million.
Very good. So where to get the 10 million? Is from?
Retain profit.
Yes, we use the second method. That is, we are going to take the balance from the retained profit account. Therefore, you will debit the retained profit. See, you find the difference between the amount that you redeem and the amount that you have replaced using the issuance of share. So the balance is the amount to be taken from the retained profit, 10 million, and transfer to the ordinary share capital at 10 million. At the end, okay, you will find that the shares redeemed has been fully replaced by partly issuing shares and partly out of profit. Okay, class, is that clear for redemption of redeemable preference shares?
Yes, madam.
Okay,
Yes, madam.
please take note, the accounts that not being cancelled down here, okay, will be adjusted if you are required to prepare for the statement of financial position. But for this question, you only have to prepare until the journal entries only. Okay, let us continue on the next transaction. Okay, there is share buyback. The company decided to purchase 50 million of its ordinary shares at 1 ringgit 70 cent each and cancel the share immediately. So the first step, cancel the shares by debit the ordinary share capital. Okay, 85 million. Where do you get 85 million? 50 million times 1 ringgit 70 cent. Credit to purchase of own share. Okay. Next, you close the purchase of own share and make the payment. Okay, since you are purchasing the shares, so you have to incur cash outflow. So this account, purchase of own shares, will be closed immediately. Since the payment already settled. Remember the last part. Okay, similar as to redemption of preference shares, according to Companies Act 2016, the shares repurchased using the cancellation method need to be replaced back. Okay, so the method has been mentioned clearly by the Companies Act where the amount is to be taken from the profit. So how much, class, the amount to be replaced? How much is the amount to be replaced, class?
85 million.
Yes, very good. So this 85 million which has been cancelled from the ordinary shares need to be replaced back. So how to replace? You are going to take the same amount from the retained profit account and transfer to the, this is not purchase of own share, class. This is the real mistake. This one is real. It should be what?
Ordinary share capital.
Yes, ordinary share capital. Please make adjustment on that. Correction. Correction. This is wrong. It should not purchase own share. It should be ordinary share capital at 85 million. I think this error happened when we do copy and paste. Okay, share buyback completed already. Is there any question, class?
No, madam.
Can I proceed to the next transaction?
Yes, madam.
Okay, we're done with number 1, number 2, number 3. Now let us focus on number 4. The company wants to redeem all of the 10% debenture at its current value. Okay, look at the balance of debenture here. According to this statement, you have balance of how much? 16 million 500,000. Meaning you are going to repay all this value. So how to record the transaction? Very simple. Debit. Debit what?
10% debentures.
Yes, because you are going to reduce the liability, right? So debit the debenture account and credit the bank account with the same amount. You redeem all, If the question said by installment 5 times, so you will have to divide by 5. Okay, you have to refer to the question closely. Okay, last one. Bonus issue. I hope you still remember what we have learned in chapter 2. The company wants to issue bonus share at 1 million unit. Okay, the amount already given to you and the price also already given. So you are going to use your reserve. What kind of reserve, class? Do you know what kind of reserve? The question said you are going to use what? Your retained
Retained
profits
profit.
account. Okay, so the first step is debit your retained profit account by how much? The number of shares you want to issue and the price, 2.5 million. Credit bonus issue, okay? And then close the bonus issue and transfer to the ordinary share capital account. So that's all about Menora Berhad. Okay, class, do you have any question for Menora?
No, madam.
You understand how to record the transaction for different transaction?
Yes.
Okay, good. Now, I just want to test your understanding. Let's say, okay, refer to number 3. Let's say I want to change the scenario where the company wants to purchase its ordinary shares and keep it as a treasury shares. We want to change the method. Okay, let's say the company wants to keep it as a treasury shares. How to record the answer, class? You still remember the step? Debit what?
Debit treasury shares.
Very good. Debit treasury shares. And credit what?
Credit bank.
Yes. How much? The same amount lah. 50 million times 1 ringgit and 70 cents. Okay, is that clear, class?
Yes.
Okay.
Yes, madam.
Right, so that's all for the discussion on this question. Let me stop the recording first.